Hello everyone, welcome to the ichimokujcharts.com daily analysis for the S&P 500 for Thursday, June the 21st, 2012. A change of trend today and a very large black body candle. Previous day's trading we had the inside bar in bar chart terms, an inside day, a day of indecision in the market, and I suggested that there was a strong possibility for a change of trend, and we've seen that change of trend occur. The fact that the market was also trading near the resistance offered by the cloud saw the sellers come in, and this shows how strong the influence of the cloud as an area of support or resistance is. The candle today made a lower high and a lower low, thus giving us a first time frame change of trend to the downside. But we have a large black body. The large black body denotes the sellers making very substantial net bearish progress on the day between the open and the close. And if we look back through the recent past, it's been a long time since we've seen that size black body, and it's quite significant. The sellers have come back with great force. They've been that strong that they took out the support at 1347 and then the strong support at 1333, previous resistance area. They took it out in a very, very bearish way, and it does say something about the strength of these sellers in this market at the moment. These sellers have closed with control of this market by closing down towards the low, and as I've mentioned, strong commitment by trading down towards the lows and extending the lows throughout the whole trading day, where the buyers showed no strength throughout the trading day. In terms of the price patterns that we highlighted previously, the complex head and shoulders pattern and the wedge type pattern, now very unlikely that the market will meet those targets up there. Very substantial resistance that the market will interact with from the cloud at the moment. In terms of the Fibonacci extension and what we're examining now, that the market is in a first time frame downtrend, we're looking at the relationship of the current downtrend to the previous time the market was trending down. And today in one candle this market has taken out all of the significant areas, or the close by significant areas, the 50%, the 61.8% and the 100% in a very bearish way, and it really says something about the strength of the sellers in this market. The next target here is the 161.8% level at 1316, and we should look to buying coming in around that area or just beyond. If we see the sellers lose commitment around this zone, then there could be potential for another change of trend to the upside. But if we see solid bearishness below, then the 261.8% at 128 or 1287 will be a potential target. In terms of the Fibonacci retracement, now we're examining the relationship of the current downtrend to the prior upswing in the market, and the market once again, as we saw with the Fibonacci extension, has taken out three important areas: the 38.2%, the 50%, the 61.8%, and we've had a solid bearish close down below there. The next target we have is the 100%, and that's at 1306, and roughly coincides with the round number 1300. Very strong support there. We can see these 1, 2, 3, 4 candles where we saw buying coming in, and it held as a barrier to the sellers, and that will be a very, very solid area of support for this market moving forward. In terms of Ichimoku, the market is bearish in the long-term time frame by trading below the cloud. We're maintaining that bearishness that we've seen for more than a month or so. The market is now also bearish in the short-term time frame by trading below the Tenkan-sen, and it's been some time since we've been trading below the Tenkan-sen, and that could be significant for this market. But we are still trading above the Kijun-sen, and that means that we're technically bullish in the medium-term time frame. But that Kijun-sen has turned flat, and as I've mentioned many times, when the Kijun-sen turns flat, price action tends to be attracted back towards there. I did mention that yesterday, that that made it a very strong possibility that the market would retrace back towards there, and it's highly likely that we will see the market test down to around that level, and that's at 1315. It should hold as very strong support for this market over the next day or two. So just summarising, we have a market that's bearish in the long-term time frame, bullish in the medium-term time frame, but we are retracing back towards the equilibrium offered by the Kijun-sen. The Tenkan-sen is above the current price action, so we're bearish in the short-term time frame as well, and we're seeing a lot of strength from the sellers. They have very solid downside momentum in terms of supply and demand, and it's likely that this market will test to lower levels. The 1300 area will offer as very solid support if the market does trade down, but we do have some decent support at 1315 where the Kijun-sen is trading at the moment.